ABB India delivers an all-round beat in the fourth quarter. Stock rises nearly 4% as the revenue of the company grows over 20% and margins improve.
Zen Technologies loses another 10% after 20% fall yesterday. The stock continues to sell off post-earnings, even as the management tells CNBC-TV18 that they stick to their guidance given for FY25 and see a 50% revenue CAGR over the next 3 years.
JP Morgan issues an outperform rating with a target of 7,200 rupees per share on persistent systems, citing 29% earnings compounding till FY27.
Tech Mahindra 2 trades higher following a bullish note from CLSA. The brokerage has set a target price at around 2,030 a share for the stock with an outperform rating.
You're watching us here on Chartbusters, live from the CNBC-TV18 Motilal Oswal studio. I'm Manglam Malu, with me, Nigel D'Souza. And we're seeing the mid-caps sell off a little bit today. This morning, we have the mid-cap index down by almost 1.1%. There was a brief recovery immediately after the open on the frontline indices and the mid-cap index as well. But seems like those recoveries are being sold into. Currently, the Nifty 2 firmly below that 22,850 mark after having crossed levels of 22,900 and briefly going into the green this morning as well. We're at the low point of trade. The picture continues where we see an opening at the flattish level that gets sold into. There is a recovery. That recovery gets sold into once again for the markets to be at the lower end of today's trading range so far. The question is where we go from here. Hi, Nigel.
Well, yes, that's right, Manglam. Some select stocks are getting seeing a little bit of buying from the day's low. PI Industries, the stock has seen, it's almost moved into the green, actually. I think we should get PI Industries up for you on the screen. Even in Jubilant Foods, that's another one that's seen some kind of buying from the low point of the day. So keep an eye out on a couple of these names. But let's go across the Shilpa route of Prabhudas Liadar, who joined us for a technical check. Hi, Shilpa. Good morning. Good to see you win. What's your take? We were talking about a quadruple bottom at around that 22,700. Does it hold, or do you see further levels down south?
Good morning, Nigel and Manglam, and thank you for having me on the show. Talking about the indices level, we keep seeing that 22,800 is time and again tested and defended. But the more we test on the downside, I believe you get to the weaker side where levels of 22,600 should be tested from here. And as long as we are not sustaining above 22,930 decisively, we are definitely going to see some sort of weakness in the market today, and some more slide is definitely pending. Maybe 70-80 points or 100 points of downside move can again happen today. So sell on rise is the key for the session today, and any move towards 22,900 should be considered as a selling opportunity.
Okay, sell on rise. Got it, Shilpa. What about individual stocks? What are you looking at?
I have one buy and one sell. The buy would be in IT HCL Tech. HCL Tech is definitely looking better, and IT is performing much better in this scenario. So with a stop loss of 1,700 for the stock, you can look for targets of 1,745 to 1,750. The other one would be a sell in Hind Petro. We are definitely witnessing some sort of long unwinding here, and stock is trading at around 314 zones. There's a resistance at 320, so that should be a stop loss, and look for targets of 300 to 295.
Okay, all right. Just one thing, Shilpa. This sell on rise, when does it get negated? As you were saying, a bounce towards 22,900 should be a good shorting opportunity. Beyond what level would this get negated?
This texture actually on a few, if you consider for a few more sessions to go, until and unless we don't sustain above 23,200 decisively, to be more precise, a close above 23,200 will definitely show some sort of respite to this trend, where levels of 23,600 to 800 can again come in. But until and unless that is not happening, so any intraday rise also can be a selling opportunity. Otherwise, for positional sellers, also keep that stop loss of 20,200 on closing basis, and if you do that, I believe a level of maybe 22,200 to 21,800 can also come in positional.
All right, we take that point, Shilpa. Thank you so much for joining in. So before we slip into a short break, pull up the intraday chart of Gillette. That sees some buying at the high point of trade, and Godfrey Phillips is the other one, which continues to do well, up around 6% now. Take a short break, come back. On the other side, we have the management of Borosil Renewables.
Welcome back. Markets down 130 points or thereabouts. But the other stock we're going to be looking at is Borosil Renewables. You know, the past quarter was a weak set, but the street wants to look ahead. And that's why I think the stock was higher in today's trading session, holding with a gain of closer around 5%. To help us out with what's the way ahead, we're joined by Mr. Keruka, the Executive Chairman of the company. Hi, Mr. Keruka. Good morning, and always good to have you on the show. Well, could you give us a couple of details? You know, you were rallying for some kind of protection, and the government of India heard you. And you have already said that, you know, since you've got the protection, you're looking at expanding capacity and fulfilling the needs of the domestic industry. So let's get a couple of points out of the way. On an average, what was the realization you got for the past quarter? And now, since you have that, minimum import price that's been levied, or the duties that have been in place, how much do you see pricing improve? And what does it mean in terms of profitability of a standalone business? The margins for standalone business have been in mid to high single digits. Do you think you get to those mid-teen margins?
Yes, sir. Thank you very much. Nice to be on your show as always. The government was very supportive of Indian industry and decided to give us a provisional duty, which we got on the 5th of December. Since we had already since we were contracted out for supplies in December, we could not get any advantage on the prices in that month. However, effective January, we've started getting much better realizations, and that is continuing. So we're looking at a much better financial working now as compared to what we've seen in the last couple of years. The working is good enough for us to already decide to press ahead with another 500 tons of production expansion, because the country needs the glass, and we are not going to be lagging behind in delivering the glass. So yes, the last time we spoke, we had a provisional duty which had been recommended, and now the final recommendation has come in from the Ministry of Commerce, which has been forwarded to the Ministry of Finance. We still need to have the final nod from the Ministry of Finance, but chances are that we should get it, because they already supported the provisional duty. And it's very clear from the government's intent that they are supporting Indian industry. And with all of this, we should be looking at good times ahead.
So if you could quantify those good times, Mr. Keruka, we wanted to understand what was your average realization in the previous quarter. The duty which has come in, and the price that is mandated is close to 56,000. Yeah. How far are you from that? By when do you get there? And once you get there, what do your margins look like?
So we were at 42,000 during the last quarter. Okay. And the minimum import price recommended is around 56. So we are well on our way there. January was already a good month for us, and we expect to see similar kind of situation the next couple of months. And we feel that, in fact, my finance director was saying yesterday that we're looking at about 30% margins now, which is much better than whatever we've had in the past. So we're looking at good things. Obviously, we require full support from the Ministry of Finance now, and then everything should be fine.
So, Mr. Keruka, just to come on to that point, you're saying the standalone margins will start gradually moving towards that 30% odd mark. Since you'll be getting the full benefit, should we assume from the last quarter, I can see you did around 7% standalone margins. Yeah. So going by, the kind of business that you've seen in January as well as early February, for this quarter, that is for quarter 4, should you be in the vicinity of around 20%? And from quarter 1 of the next fiscal year, you'll get back to that 30%. Should that be, the rough estimates we should work with?
We should be better than 20%.
Better than 20% in quarter 4 itself. Can you be? All right. And then from quarter 1 of the next fiscal year, you go to around 30%.
Yeah, we might actually be between 25 and 30% in this quarter.
In quarter 4 itself. Wow, that would be the best margin, sir, all the way since June 2022. So clearly this protection is going to help you.
It will. You see, it's very important for everybody to know that we have a very low asset turnover ratio. So of course, we have brownfield expansion, so we have a better asset to turnover ratio. But if there's a greenfield person, for every 100 crores that he invests, he only gets 80 crores of turnover. So, you know, even if it's 30%, it's still not so much compared to the investment that he has made. And the second thing which is very important in the glass industry is that every 5 years we have to redo our furnace. And that's a very expensive thing. So we need to be able to do that. You know, we need to have enough money there to grow. And unless investors get a decent IRR, people will not come in. So what the government has done essentially, it has given the boost to for fresh investments. And we need to ramp up capacity in India, we are well on our way to that, I must say.
All right. You know, so let's talk about that itself. You said that Q4 will be 25 to 30%. Thereafter will be 30%. And I presume that 30% is when you expect, you know, your realizations to be at that 56,000, the aspirational 56,000 mark. That happens by the first quarter of next financial year gradually. For the next full financial year, what are you projecting in terms of volumes and overall EBITDA? Largely because you are also expanding capacity. So at what point do these capacities come on stream?
So for the next year, we will not have fresh production, which means we'll continue to have our 1,000 tons per day. We have been working very hard to ramp up, to squeeze out more glass from the existing capacity. So we might see maybe a 10% higher output in terms of quantity, but not much more than that. And we expect to be able to have a nice year going forward. And in the meantime, of course, we're continuing to expand. We're continuing to invest in a new unit, which would be 50% of our existing capacity, which is not small. Okay. And I expect that might be on stream perhaps by October of next calendar year. I'd say a third quarter of 25-26.
October 2026.
Yes.
Okay, all right. Very quickly, sir, you know, on the consolidated basis, we would like to understand the profitability. And if I look at your consol minus standalone, that's still a loss because the European business has been struggling. So two-part question. One is, how is domestic demand on ground? Is it as strong as you anticipated? Point number one. Point number two is, when does the European business turn around? Very quickly, sir.
Domestic demand is strong. We see absolutely no problem in selling whatever we are producing. So that's out of the way. The second thing is the European business. So what happened in Europe, you see, the European Union itself has mandated that 25% of all renewable energy generated in the European Union should come from equipment which has been manufactured in the European Union. This has not been adopted by the German government, which is the largest economy in Europe, in their last iteration. So the last coalition government, there was a very small fraction partnership by the Liberals, and they very strongly resisted any kind of support to domestic industry. And they were then dismissed from government by the Chancellor, and fresh elections were called. Now, the elections are due on the 23rd of February, which is just a few days away. And it is strongly expected that the CDU, which was the rightist, which was the rightist government in Germany, which is strongly pro-industry, and the AfD, which is the far-right movement, and of course we have the SDP. So I mean, I'm not a political pundit over there, but whether it is the CDU and the SDP, which is the Social Democrats, both those parties are strongly pro-industry. And the CDU and the AfD are probably also strongly pro-industry. So we do expect that a decent kind of a policy decision will come, in which case the German factory should be doing very well again. So that is, we are keeping our fingers crossed on that.
Okay, all right. We'd like to understand about that a little bit more detail. But as you said, things looking up, particularly on the domestic front. Standalone business is bulk of your profitability. So we'll track that. Thanks a lot, Mr. Keruka, for joining in and filling us in with all of those details. By the way, keep an eye out on the bottom of your screen. Jyoti Structures, I think they have a current rights issue that's underway. Their board has approved potential one-time settlement with lenders. That'll be good news for them, because otherwise the fear is that if that settlement doesn't come about, then, you know, there could be various legal hurdles as well. So that stock has seen a bit of recovery from the lows of the day. As I said, I think that's the rights issue that was scheduled in February itself. For the time being, let's shift focus to a special little segment where we get you a few ideas for profit from Money Control Pro. Nitin Agarwal of moneycontrol.com joins us to talk about a stock that is tracking closely. Nitin?
The company that I have chosen for today is Landmark Cars, which is an auto retailer for luxury and the premium segment. First, let me touch upon its Q3 number. The company's revenue from operation recorded a growth of around 18% over YOY basis, primarily driven by the new clients and the new store expansion. However, the ramp up in it's a new store weighed on the EBITDA margin, which contracted. However, there are a couple of factors that make us a bit about the company. First, there's a significant headroom for the growth. India being the third largest car market, the penetration of luxury and the premium vehicle is less than 1%, which in compared with any other developer and the developing country is very low, and hence there's significant room for the company to grow. In addition to that, in the anticipation of the significant growth that is expected in the premium and the luxury car segment, the company has been expanding its reach across the various regions in India, and it has already opened up 23 new stores outlet in FY25, meeting its target. Further, the company has tied up with all the premium segments in the country. Some of them are Mercedes-Benz, Jeep, Kia, Hyundai, Mahindra and Mahindra, BYD, etc. In terms of valuation, the company currently trades at around 22.3 times FY26 projected earnings, which we believe is very reasonable given the earnings growth outlook for the company and the significant demand that we are expecting in the premium and the luxury segment in India.
Okay, all right. Thanks a lot for that, Nitin. For the time being, we slip into a short break, come back, continue to focus on markets and stock-specific action. But as we do that, here is some good news for our viewers. India's business news leader is now a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store, or scan the QR code on your screen. More news and updates awaiting you. Welcome back. Well, as we were telling you, that one-time settlement announcement from Jyoti Structures that were just, on the bourses, that's been taken note of by the markets, and the stock has seen a good recovery. Besides the stock, at least the good news is being absorbed by the markets. Stock aside, good news should be appreciated, and at least in this case, it's taken place because over the last few days, the mood has been so somber that a lot of good news has been ignored. But that said, let's get in Vinny. She's here to tell us about a brokerage update on Persistent Systems. Vinny, take it away.
Absolutely. So Persistent System, we have a positive outlook coming in from JP Morgan, and this is, do not forget, despite the high valuation that one has seen for Persistent System. The stock has seen a run up of almost 27% in the last 1 year, while Nifty IT, when you look at it, it's down almost 4 to 5%. So, despite this, Persistent outperforming the Nifty IT, JP Morgan is quite positive on Persistent System. It's one of the fastest growing companies for JP Morgan in their coverage. 29% in terms of earnings growth, CAGR growth over the next 2 years is what they're expecting. Management, they are highlighting, is navigating well through the tough macro environment, and they are seeing that there is a lot of opportunity that is opening up for high quality growth stocks is what JP Morgan is highlighting, and they believe Persistent could see a good run up coming in from here. They've given a target price of 7,200 rupees per share, and currently the stock is trading at somewhere around 5,600 rupees per share is what we're looking at. They see a potential in terms of margin expansion also coming in, especially in terms of reduction coming in from subcon as well as operating leverage, and a credible growth is what they're watching out for. So they're quite bullish on Persistent System.
Okay, thanks a lot for that, Vinny. Well, it's time to wrap up on this edition of Chartbusters. But as we end this edition, well, a small programming note for our viewers. CNBC TV18 and HSBC India are back with Season 2 of SME Champion Awards. This prestigious platform celebrates SMEs that are pushing boundaries, making an impact, and shaping the future. Nominations are now open. Scan the QR code now and submit your entry for SME Champion Awards Season 2.